In this video, I'm going to do the technical analysis of Dow Jones Industrial Average Index for the week commencing from October 25th, 2021. Okay, so I'll be doing this technical analysis, okay, in two parts. First, it will be on the weekly chart, and then it will be on the daily chart, and this way we'll be able to get the most accurate results here. Okay, so I will do it on the weekly chart first. So before I do the technical analysis, let me update you on this thing. Okay, so it's as you know that this October 21st, October 2021. Okay, it's an earnings month. Okay, means the companies are posting their earnings in this month, and many have already posted their earnings. Okay, so in the coming week, okay, these are the giants who are going to post their earnings. Okay, so these giants are going to affect S&P directly and Dow indirectly. Okay, and in case of Dow, okay, so there are other companies like American Express, Visa, okay, means the financial companies, okay, and then there are other companies that are going to post their earnings. So overall, Dow will also be affected because of these earnings. Okay, and because as you know, like whatever happens in Dow, okay, or means because these indexes or these indices, S&P 500 and Dow, they work side by side. If something happens in one index, okay, then the changes are reflected in the other index. Okay, so this is how Facebook will post its earnings on October 25th, that will be Monday. Then Microsoft and Google on October 26th. So this October 26th, this Tuesday, okay, we'll be able to see some very heavy movement in Dow, okay, on Tuesday, okay, of October 26th. Then we have Apple and Amazon, that will be Thursday. So Apple and Amazon, so again we will be seeing some good movement in these indices on Thursday. So Tuesday and Thursday are the most important days in this week. Okay, so you need to exercise caution, okay, when you're trading. And if in case, okay, so this is my advice, if in case you think that means because of some very very sharp movement in indices, or if any stock, if you are stuck at some place, then do not try to exit your positions. Okay, because in that case you will have to bear the losses, and there will be very heavy losses. So it is advisable, do not try to exit the positions, because eventually there will be a rebound, and whenever there will be the rebound, okay, it will touch your mark. Okay, and then you can exit, okay, in like plus minus 5% or plus minus 10% profit or loss. Okay, anyway, so let's do the technical analysis here on the weekly chart first. Okay, so this is the weekly chart, and these are the weekly candles. Okay, so if you see this, the last candle, okay, this last candle, it's a bullish candle, and before this candle there were two candles, one, two, three. So this is a perfect pattern, okay, for three white soldiers. So this is what we say, like three white soldiers. Okay, so whenever three white soldiers are formed, okay, it's a sign of reversal. Okay, so it's a sign of reversal. But this reversal, okay, so when I say reversal means actually that market may come down this much heavily. Okay, but this may not actually happen. The reason is the earnings that companies are going to post in the coming week. Okay, so if because if the companies post some good earnings, okay, and if the index moves up heavily, in that case the theory of three white soldiers, okay, it will be cancelled and market will move up. Okay, and okay, so one more thing, if you have noticed here, sorry, so if you have noticed here that this particular candle that was formed in this week, so last week, remember I told you that this 35,700, okay, so I was telling you for last couple of months that this 35,700, it is going to act as very strong resistance for the market. Okay, market means Dow Jones. But yes, in this week, okay, Dow Jones, it was able to cross and close above the highs of these weeks. Okay, that means these highs, they were formed in the month of August. Okay, so it has breached these highs. Okay, and it has formed this candle above. But the problem is that the closing of this candle was below 35,700, means below our resistance level, which is not a good sign. Okay, so in order to move up, okay, on the daily basis, okay, at least two consecutive candles, market must close on two consecutive days on the daily chart. Okay, then only we may think like, okay, that it is now going to move up. So this is this is how, okay, we are going to interpret these candles. Okay, so now if I do the technical analysis here, so first we have the moving averages. So market has closed two consecutive weeks. Okay, for two consecutive weeks it has closed above the moving averages, which means it is moving up, means it is bullish, and it is going to hit this the upper band of the Ichimoku, which is currently at about 35,900. So it is going to hit 35,900, means not exactly it will hit, but it will try to hit. Okay, but if there will be, some downtrend in the market, then it may miss this the upper band. Okay, anyways, but also the market is above the median of the SMA of the Bollinger Band, which means it is on the bull side of the Bollinger Band. Okay, means it is bullish. And okay, Ichimoku, through Ichimoku it is also bullish. And if I talk about some other indicators here, okay, so we have stock RSI. Stock RSI is 46, means the K channel is 46.12. It is not even more than 50. Okay, so the chances are that it may still, turn around. But MACD is bearish. It is not bullish. Momentum that was in favor of bears. Okay, it has come down, and it is still it is coming down, which means that okay, in one way or the other, it is supporting the bulls. Okay. So through all of the technical indicators, except the MACD, through all of the technical indicators, okay, on the weekly chart, it is bullish. Okay. So okay, so I forgot to tell you the support and resistances. So we have this 35,700. Okay, this is very strong resistance. Okay, and yes, this is the bull trend, no doubt that this is the bull trend. But the problem is this resistance, because on the weekly basis, market has closed below 35,700. It means it breached 35,700, but it closed. We always look for the closing of the candle, but it closed below 35,700. Okay, so that is the point of concern for the bulls, because until and unless it closes above 35,700 on the weekly or on the daily chart for two consecutive days, okay, it is not bullish. It is not bullish. Remember, okay, means it may come down anytime. Okay, uh, fine. So support and resistance, we have very strong resistance at 35,700. And if on the daily charts, okay, for two consecutive days, if it moves above and closes above 35,700, in that case, this 35,700, it will act as very strong support. Other than that, we have a very heavy confluence zone. Okay, this is around 35,300. Okay, so this 35,300, it is going to act as, very strong support, because of the confluence zone. Then we have another confluence zone here. Okay, it is at 34,800. 34,800. Okay, then finally we have our support, which is at 34,500. So market is not expected to move up, move down, means below this 34,500 in the coming week. Currently it is at 35,700 approximately, so it may come down by like 1,000 points, 800 points. So these are the support and resistances. And yes, one more thing, that if it moves above then it will be moving towards 37,600. Okay, 30 sorry 37 yes 37,600. This is going to be a very critical support for the market in like 1 month or 2 months. Okay, now let's move on to the daily chart in order to confirm like what exactly is going to happen in Dow Jones again in the coming week. Okay, and how that is going to happen. Okay, what and how. Okay guys, so here we are. This is the daily chart. Okay, let me mark it. This is the daily chart, and these are the daily candles. Okay, so we are here on the daily chart. This is the daily chart of Dow Jones Industrial Average Index. Okay, if you see this, the last candle, this last candle, okay, this was formed on October 22nd. It's a bull candle. Okay, so as such, there is no problem, okay, in this bull candle. But yes, if you see clear, a little bit, closer, then you will see that this bull candle, it actually breached the level of 35,700. It moved up, then it came down, and it closed at 35,677, which means that it failed to close above 35,700, which is our mark. Okay, this is very strong resistance. Okay, I'm telling you this for last couple of months that this 35,700, it is very heavy resistance. Now in order to move up, okay, or in order to be bullish, the market must close above 35,700 on 2 consecutive days. Remember, 2 consecutive days, not one but 2 consecutive days. Okay, and if it does, in that case only there will be a bull trend, and then the market will move up. Okay, so initially what may happen is that on Monday, okay, probably on Monday, sorry, because there is, we have this the upper Bollinger Band, okay, and it is at 35,842. So if there will be a gap up opening, remember, if there will be a gap up opening, then first the market will try to cover, or it will try to hit this 35,842. Okay, and thereafter, and because Facebook is going to post its earnings, okay, on Monday. Okay, and also there are some segments, the sentiments in the market, okay, they are negative. Okay, particularly in S&P and also in Dow, because of this bull run. This was a short term bull run, because of which psychologically there are some negative sentiments in the market, so market will try to come down. Okay, and the levels that I told you, okay, that first it will try to find support here, okay, at 35,400, 35,400, because of the confluence zone. Then the next confluence zone, okay, that we have, it was 34,700. Okay, 34,700, and then it has a support. Anyways, 35,700 is the resistance. Okay, so what we are going to do here is that we are going to wait, okay, for the market to show us or to give us the direction, a clear direction. Okay, or my advice is that if possible, then do not trade in this week, because this is the earnings week of the heavyweights of the market. Okay, the heavyweights of the market, that actually means the companies that actually drive the market. So you never know, okay, whether the market is going to move up or move down. So yes, one more thing that I forgot to tell you is that the technical indicators, okay, or this technical analysis may not work exactly, okay, as I'm telling you, because of the earnings, okay, that these heavyweight companies are going to post. Because whenever these companies, okay, or any company that posts its earnings, okay, and if it is more than expected, then market moves up sharply. And if it is less than expected, for example, if you see this particular candle, okay, this particular candle, so this particular candle, it was formed because JP Morgan, okay, and there was Bank of America, I guess, okay, they posted some very good earnings. So because of these one or two companies, these banks especially, okay, we have seen this the very heavy bull candle. Okay, so whenever companies they post their earnings, to the technical indicators or the technical analysis, it may not work exactly, okay, as it was supposed to be. So in that case, you need to exercise caution. Okay, but yes, eventually at the end of the day, okay, for example, if market shoots up, okay, highly, or sorry, if the market shoots up heavily, then eventually it will come down, and then it will even break this particular level. It will come down further. Okay, so eventually the market will, or market must follow the technical analysis and the technical indicators. But yes, in the earnings week, okay, it is not advisable to trade. Okay, and you can trade only if means the expected earnings from the market, whether market is going to move up, or it is going to come down. Anyways, so if I do the technical analysis here, okay, so first it will be the moving averages. So if you see these, the moving averages, okay, so these moving averages, the market is moving up. So through the moving averages, the market is on the bull side of the moving averages, which means market is bullish. Okay, and Bollinger Bands so market is above the median of the Bollinger Band, so market is bullish. To the Ichimoku, market is on the bull side of the Ichimoku, market is bullish. And if we talk about some other indicators, Okay, so we have stock RSI. Stock RSI market is heavily bullish. Remember, it is not bullish, it is heavily bullish. And MACD, through MACD on the daily chart, okay, it is bullish. So again, MACD is also heavily bullish. And momentum, yes, there is some good momentum. It's not excellent or not heavy momentum, but yes, there is some good momentum. So all of the technical indicators on this daily chart, okay, all of the technical indicators are saying that market is bullish, and we have also seen the same on the daily, on the weekly chart. So it is confirmed that market is bullish. But the only problem here is this particular resistance at 35,700. So if market fails to break this resistance of 35,700 in this week also, in that case, for sure it will come down. In that case, it will find support here on the moving average around 34,800. Okay, and then the Chimoku, and then finally there is this very heavy support at 34,500. It is at 34,500. Okay, so initially it may try to move up, okay, and then it may try to come down. Okay, and once it comes down, then these moving averages will meet it, okay, at somewhere here around 35,400, and then it will take a rebound. Okay, so this is how exactly it is expected to work. So advice is, okay, here the advice is buy on dips. So buy on dips. So you should wait for the market to come down, okay, and then, sorry, and then once the market comes down, then you can buy on dips. Okay, guys, should you wish to participate in my options trading programs, options strategies program, if you want to learn what the options are, okay, and how to trade in options, what are the options trading strategies, then I have given the links to these programs in the description of the video. And if you want to join this, if you want to join my Discord group, okay, so the next cycle is will start from, will commence from November 1st. Okay, so you should complete the process by October 27th, or October 28th at max. Okay, so I have given my email address in the description of this video and also in the comment section. You can send me the email for more information. Okay. Okay, guys, so this was the weekly technical analysis of Dow Jones Industrial Average Index for the week commencing from October 25th. Do not forget to like and subscribe this video and channel.